say, I mean, 100%, I would say the bull market's back. And you know how I know that is because, I know there's not like a direct connection between the stock market and crypto, but I would say there is some sort of connection between the stock market. There, correlation is not causation, but I would say that there is some correlation there, very much so, right? And if you just take like a quick look at the S&P 500, right? I would see that, the level that we're at now is pretty close, basically almost to the top of the level the S&P was at, December of 2021, January of 2022. The stock market, the S&P did top off a little bit later than Bitcoin, like a month or so later. But other than that, if you look at S&P, we are damn near at the very top. Okay. And, they're, kind of scary. You don't want to get double topped ideas. We want to see it, kind of flip that, previous level as support. We don't want to get shut down overhead resistance. That would be terrible. But, but to see that from S&P, especially unexpected, the way it kind of came up in 23, it was kind of like this kind of like, I feel like 23 was like, with reflecting on 2023 as a whole, it was like for crypto specifically, it was like a bull market in disguise. It was a bull market in disguise because a lot of the year with Bitcoin specifically, we spent underneath this 32,000 support resistance, right? We popped up super early in the year. We had a bullish January, then we traded sideways, and then we had like a bullish pump in March, and then we traded sideways. But really, we got shut down below 32 in April. We got shut down by 32 again in June and in July. And then, finally October, Q4 of the year is when we really woke up. And now, where Bitcoin is sitting and now, at 42,000, under 42.5. And, where, Bitcoin's local high sits around 44.5. And this is amazing for Bitcoin, And this is, why, there is not an exact correlation between Bitcoin and the stock market because, the S&P is at, the high from last year, like right at the high from last year. And Bitcoin is, we still have a long way to go for Bitcoin to get back to its high. And there are a couple like overhead support resistance levels. Specifically for me, I would like to see Bitcoin get above 48,000. That's a pretty big support resistance line that I would personally like to see Bitcoin get over. But at the same time, you take a look at Bitcoin dominance. Bitcoin dominance has been, falling down. It's falling significantly. All of these, basically, it pumped up the first 5 days of December, and since then it has fallen, 7%. To 51%, which has given plenty of room for the altcoins to run, right? So, we are in this really interesting spot. And, I like doing a lot of the market updates on my own, honestly. But we do have Gareth Soloway on stage here. So, Gareth, I'm going to throw it to you to do a quick. Yeah, what's up, dude?
AJ, before I go to Gareth, I'm glad you have a different opinion. I mean, I've loved 2023, but I'm worried about short term. And I have a ton of questions for Gareth and everyone else on the panel. So let's start off with him because I'm watching the 4 cycles that are inside each cycle, halving, and I think this is the disbelief cycle. But I want to hear from Gareth, who's more TA, and then David and Travis, and get you guys' input. So I have a ton of questions of what I should be doing with my money. I'm sure everyone else does too. So go ahead, Gareth. Let us know what we should be looking at. Gareth, you there? If not, in the meantime, we could.
I feel like he's trying to talk, but I feel like he's gonna have to leave and come back. But I mean, in the meantime, Joe. First of all, okay, sure.
Yeah, let's go to Dave.
Well, I mean, I actually think that 2024 is going to be the year that when we look back on it is the delinking year. I think that there's a lot of reason to believe that, Bitcoin as a risk asset is certainly driven, just like all of crypto, on the margin by speculators. But I think it's the year that actual asset allocators move into Bitcoin, which could make its correlation to the S&P dramatically lower. I think we should talk about all that. But Gareth is back, and so since he's my favorite technical analyst as well.
Can you guys hear me?
Yeah. Awesome.
All right, awesome, guys. Yeah, I don't know what went on there, but I just jumped out and came back in. Now it's good. But yeah, thank you guys for having me. I appreciate it. And so basically, a couple things. Number one, you AJ, you mentioned that 48,000 level, and that's like the sore thumb. That's the one that sticks out. It's a confluence of multiple trend lines converging right around there, and it's also the Fibonacci 618 level to basically the penny of all those lines converging. So if we do get the expected pop on a approval, that would be the likely target. I always say, like, you might overshoot a little bit with that 50 even number. There's a psychological nature for people to want to see that even number of 50 pierced, but I do think, again, that that's a possibility for sure. The only kind of caveat, and I'd love to hear some of your opinions, is like when you're talking about crypto going there, like how many more people haven't bought crypto yet? Because to me, I'm not seeing anyone not in Bitcoin because of this approval. And I do wonder if there's a consensus, or if there's not, on a sell the news event. Like, is it possible that we get this approval and everyone had already bought? Now some people are saying, okay, let's take profits, and we see a dump back down a little bit.
I mean, Dave, I will pass it to you, but 1 second, I want to comment on what Gareth said. And that's definitely, a lot of the sentiment out there is the ETF approval going to be a sell news event? I feel like, eventually, there is kind of a bearish divergence playing out on the 2-day chart with Bitcoin, and that could certainly continue to play out. Personally, I would like to see Bitcoin stay above, 40,000. That would be, it would be good for Bitcoin to be boring right now. I would be totally fine with Bitcoin ranging between, 44 and 40, 44 and 40. I would be totally fine with it getting a little bit boring to kind of maintain where it is, because, we always worry, like, is there liquidity? Is there going to be money coming to the market? But then I look at, like, how far Bitcoin dominance has fallen for December. And then I look at Solana, right? And we've seen, it did get passed back from BNB, but so Solana temporarily past BNB had, like, I don't know, somewhere around $20 billion injected into its market cap. So when I think to myself, the question, is there liquidity on the side? Is there plenty of money still to come in? I would say for sure, 100% yes. And I feel like the ETF, I would prefer to think that it will not be a sell the news event. I feel like, the aftermath, sure, like a month or so after the fact, maybe. But I would say, when we see approval, I feel like we're going to see fireworks. We got Dave with his hands up. Dave, how you doing, man?
I'm doing great. Listen, I think people, and James is up here, so he can comment on this too. I think people in crypto totally don't understand the plumbing and how all this stuff actually works. And so let me try to explain some things. The first thing is the approval itself. If you told me the number, if I saw a stat yesterday that 30 some odd percent of people polled thought that there was that they were unlikely to approve in January, that Gensler would manage to keep pushing it along. I think James and I both think that's wrong, mostly because of what the staff is doing. They don't tend to have the staff work with issuers at the level that they're working with them, which is at a very detailed level, only to say no. So it seems unlikely to be the Lucy, Charlie Brown kind of scenario, although which is why I don't think it's a sell the news event, because there's still people out there who don't believe it. But the real narrative here is where the money's coming from. I like to oversimplify this to make it easy for people to understand, but the market in the short run is driven by speculators that are already in crypto. And what we're seeing with Ether today, it's retraced a bit, but jumping over 2,400 at the same time Bitcoin dropped, and Ether, the Bitcoin Ether ratio kind of plumbing towards like the highs of the reasonable period of time. And it's almost at 0.056. It went down to 0.05. Those are big moves, actually. You're seeing crypto money recycling around itself. The big thing about the Bitcoin ETF does not happen on approval. Okay, what happens is, the big thing with the Bitcoin ETF is its ability to attract asset allocators from outside Bitcoin. That happens starting upon trading of the products. And approval does not mean the product starts trading the next minute. It means that the issuers now get their act together and get everything, and they do a launch, etc. They seed the ETFs, they do stuff. It takes time. And then the product itself will take time to attract assets that have a meaningful size. But the assets they attract will be new money from outside crypto. And that matters. And so, yes, I could easily see a pop because of the skepticism, a retracement because the money doesn't fall into the market fast enough, and then a gentle grind higher again, depending on how much assets do come in over time. And so that's sort of my base case for it, which is probably a little bit different than others who think that it's really, a to the moon sort of thing. And maybe that'll happen, but I doubt it.
Dave, one of the big questions I think a lot of people have is, why is Kathy Woods selling all her Bitcoin here before the news?
Well, she didn't. For starters, she sold GBTC because she doesn't want to deal with the mechanics of translation. She made a lot by buying it at a much higher discount than it's trading at now. And if you know, because ARK is issuing their own ETF, she bought Coinbase and she actually bought the futures-based ETF as well, which, considering the premiums that's trading at, and I'm looking at it right now on screen, is giving up a little bit, but so be it. But it makes it's liquid, and she could get out of it and move into her own ETF if they in fact get her their ARK 21 shares ETF approved. So I don't think that she decreased her exposure as far as we can tell overall to crypto. Arguably, she diversified by moving into Coinbase, which is going to benefit from the ETFs as well. I think that's what we've seen.
Yeah.
And she has to diversify too, because she portfolio managing. She needs to keep her weights in check, and Bitcoin is run. But go ahead, James. I saw you on mute.
Yeah, sorry. I was going to echo what Dave said. I agree with.
Which James?
Dave Weiss. Me, James, I think, because I jumped in.
Okay, I'll speak. Yeah, it's James from CoinShare here. My thoughts are that it's not just about the ETF launch next year. Sure, it will probably have a positive price pop just because there's a bunch of people that can't invest Bitcoin that will be able to invest. But aside from that, we've got rate cuts, may even be March, April time. I think they'll be very supportive for Bitcoin. And someone mentioned the correlation between equities and Bitcoin. That is exactly the point when equities and Bitcoin correlation deteriorates even further, because rate cuts in the face of a recession are generally not good for equities, but would be good for Bitcoin. And of course, the halving and general economic malaise. And I think those kind of things, those factors, other than the ETF launch, would be quite supportive for Bitcoin.
Yeah, I mean, what I'm seeing, and I'll go to Michael with this question, is I'm seeing a repeat of 2021, where meme coins tank, NFTs start to lose value, money's not moving from chain to chain right now. Are we headed for a consolidation? Are you seeing trends that you've seen in the past? Because I know you've been in the market for a long time, or is this just a blip in the radar?
No, the trend is your friend, and the trend is definitely continuing. How soon we forget the DeFi summer? This was when the altcoins around DeFi went crazy in 2020, and that was just after the halving. I think that there will be I think it'll be as much as a 30% lift when they announce that the ETF is happening. And then I think when you're going to have a solid news is when it actually goes live, because some reporter is going to say, "Oh, there was supposed to be trillions of dollars coming in, and the first week only had 100 million, so sell." I think that's when and then it'll probably be like late summer, early fall, when historically, in your bull market, you end up having a nice run up until. Well, first of all, it's interesting because the halving is in April, right? I mean, there's a possibility we could actually go past the all-time high prior to the halving. Not likely, but it could happen. If you figure that, if we're up in 50-ish in January 10th area and we pop to 60, it could follow through, and that's unprecedented. But no, I think the answer to the overall, are we in bull market? Is bull market back? Absolutely. Look at altcoins. I mean, if you look at the overall market cap, not just the Bitcoin, but of the overall crypto market since January, we're over 3x.
Yeah, if I may just add.
Go ahead, Travis.
Hi guys. If I may just add, I think. Listen, I agree with what everybody's saying. I think the major difference is the amount of institutional money that's about to flow in. And just having seen it firsthand when ETFs launch from my prior background, that is a massive difference. And it's not all going to flow in at once, but that is a step change in terms of the amount of institutional money that just prefers to buy ETFs. That's just the way that they act, rather than just going to Coinbase or other exchanges to buy spot. Hundreds of billions of dollars, in my opinion, is waiting to buy. In terms of it's sort of like everybody's just waiting, and there's a lot of disbelievers. They just don't believe it. And what I mean by that is retail, and unfortunately, retail is last to come in. They actually have to see it. They have to see the actual approval. I believe it's happening. The cash creation was the last sort of must have in order for banks to provide liquidity. And so everybody's rushing to do that, last, kind of cash creation as opposed to in-kind filing. Once they launch, I think it's sort of the calm before the storm. And I believe the storm is going to be massive, explosive, massive, in my opinion.
It's funny. I'm like, I don't know if you remember, Dave, but in early November, we were asked on the panel if we thought Bitcoin would see 36 again before the end of the year. And I think it was me, you, and Rand were the only ones who thought it would. And now I feel like I'm the only contrarian here, where I think I wouldn't be surprised if we see 36 again and bounce back up. But Travis, I'd love to hear your opinion. Is everyone on the panel thinking we go up from here?
Well, obviously, this ETF has completely dominated crypto news cycle since BlackRock filed their ETF. I think that was the second week of June. So it's been pretty incredible that it's been a catalyst that has, far and away overshadowed anything else going on in crypto. And, I think every other story in crypto has played a significant sort of backseat to what's going on with these ETFs. And it's pretty strange to, I've been doing this for a while and did traditional for a while before crypto. And I'm not sure if I can recall a catalyst like this being stretched over that period of time, where we just did this slow march towards increasing the market's collective assigned probability of approval, and then what's the date going to be, and then tightening up the date range, and this kind of, it's been funny. And now it's like, okay, everybody's circled up around this second week of January timeframe, and now what are the initial inflows going to be? And it seems like you have to anchor it to BITO initial inflows. BITO, fastest ETF ever to $1 billion, 2 days. So to me, it's like, if these, and I think we all agree that we're going to have multiple ETFs approved and starting to trade at the same time. I think we can talk about separately. Maybe we can talk about what we think is going to happen with Grayscale, but we're going to have multiple ETFs. So it's like, if BITO got $1 billion of AUM in 2 days, if these products collectively don't get $1 billion, say in 5 days, I would think that would be a disappointment to the market, and the market would sell off. And if we're trading low 40s like we are right now, I think the market sells off less. And if we rip in advance of the product starting to trade, and say we're at high 40s, and then you have relatively disappointing inflows like I just characterized, under $1 billion within the first week, then I think you would trade off harder. I think if you got over $1 billion of inflows, say in the first 1 to 3 days, I think you're trading higher from any price. And if we're trading in the low 40s, you probably trade up harder. And if you trade in the high 40s, then you trade up, a little bit, but not as aggressively. And I feel like that's how I would characterize the first, call it 5 trading days. And then as you move from like the first week into, week 2, and then, okay, we're a month into this thing, and it's like, okay, how do you grow from a billion total AUM to, 2 billion, 5 billion, 10 billion, at the end of the first quarter of these things trading, what is the expectation? And to me, I think beyond the first week or so, I'm definitely curious to hear if I've seen other guys, Alex Thorne from Galaxy, James from Bloomberg that's on here. I don't know if you guys have put out estimates for like the first month, first quarter of inflows, or what you guys think it is. To me, it kind of matters less because there's going to be like this initial trade, and then everybody's just going to be watching the numbers. And I'm not sure. I mean, you can kind of guess, but I think it is pretty hard to guess and have like a good educated guess about like the first quarter of inflows. I mean, we could set an over under. Maybe that's the right way to do it. First quarter of like let's set it at 5 billion in the first quarter. And I'd be curious to know if people are convicted on the over or the under at 5 billion collective 1 quarter after these products launch. And that's basically how I'm thinking about it.
I go
Joe,
over on that.
Can we get Joe in the conversation? Because Joe, I want to hear what Joe has to say.
Yeah, hey guys. Thanks for having me on. I agree with Travis. It's difficult to know, how much inflows are going to happen if the ETF does get approved. But I do think the ETF would have 3 big impactful things that would happen if it does get approved. One is, I think, in the crypto world, everyone, wants their token listed on something like Binance. This is going to enable Bitcoin to be listed on Fidelity, E-Trade, and Charles Schwab. So I think that's a pretty big deal. 2, I think advertising and marketing, right? You see, BlackRock and historically Wall Street has been relatively negative towards Bitcoin, right? They would say it's a Ponzi or a bubble. Now the conversation could turn to, hey, Bitcoin's Sharpe ratio indicates it historically has had some of the highest risk-adjusted returns, and you need this in your portfolio. I think that could be a game changer. And then 3, I think a Bitcoin ETF would destroy unit bias. I think, one of the issues with retail getting into Bitcoin is seeing, Bitcoin trades at $43,000 a coin. I'm not going to buy that. One share of a Bitcoin ETF is obviously not going to be trading at $43,000 a coin. So I think it encourages people to, get a small allocation to Bitcoin and get their foot in the door. So yeah, I'm curious to hear what other people have to say on the inflows topic as well. But I think ETF is a very big deal for Bitcoin.
If I may add to that, in terms of predictions of how much inflow may flow in, let's say, first week, first quarter, I think it's important to understand it's a bit of game theory, right? There's 12 issuers. They each have clients, institutions that will allocate, and it's sort of game theory. If I don't come in now, do I want to come in later? In terms of waiting, and they're all building order books, right? They're all building. It's just like a equity issuance, right? They're building order books, and they're sitting on order books. So just think of one pension fund, just one. How much do they have to allocate in order to put in a certain amount of capital into their portfolio that they've now adopted as a hedge against inflation, a hedge against global macro, all of the other reasons why you want to own, hard money, right? Digital gold. Just taking gold as an analogy from, my experience in commodities, last 24 years, you have to allocate just a certain amount to be meaningful to your overall portfolio. So to me, 5 billion, even for one pension fund that is managing hundreds of billions, in my opinion, is nothing. It's nothing. So I believe that what I just said, combined with game theory, right? If I don't go, then do I want to go in at a higher price? Will affect the overall allocation from all institutions.
You're basically saying we're about to get 100 Michael Saylors into the crypto market.
I think what I'm saying is we're about to get a million Michael Saylors, and not because they're Bitcoin maxis, but because they just, from a capital allocation model, have to allocate, right? There are models that they have where they will now put in Bitcoin as an additional factor. And given those probabilistic and quantitative models, they have to allocate, right? The traditional metric for gold was 5 to 10% for, even a wealthy individual, you should keep in gold. I'm not saying that metric applies to institutions, but it's a guidepost. So if you look at the trillions of AUM managed by pension funds, it's not hard to get to very large numbers.
A question I have for James from Bloomberg. What do you think about, because I know that AUM begets AUM, liquidity begets liquidity. There is, it looks like, going to be some kind of race, out of the gate to garner, and there may be a, power law, winner take most, winner take all, maybe the top ETF has some large majority of all Bitcoin ETF AUM. I guess my question is, do you think that's the setup? And then do you think that somehow makes the initial days and weeks of this, that there may be some kind of like additional pressure or sort of like things going on behind the scenes from ETF issuers and all of their contacts throughout wealth advisory and everything like that, where they're trying to rush to get AUM into their specific instruments, in order to kind of win this initial battle out of the gate? And is there any, one more question to that, is there any analog? Have we seen something like this previously? I don't know, maybe with like the weed ETFs or, something else. I don't know.
Yeah, well, I'll answer the last one first. Can you guys hear me first?
Yeah.
Okay, good. There is no real analog here. The closest analog would probably be gold ETFs. And even then, I don't think they're a perfect analog to describe this. On that 5 billion number you threw out for the first quarter, I'd probably be on the under. I mean, the way that these institutions work, that would be the most likely people to be buying these things are, it takes time. They're going to do due diligence. Some of the people, so there are plenty of those out there waiting to invest in this, but there's platforms and a lot of the advisors and brokers that work for these wirehouses and different platforms. There's due diligence that has to occur before they can even purchase these things. And on the net flow side, I'm curious. One thing I would be interested to see is like maybe if you exclude GBTC, because I'm expecting them to see outflows, you could get that number up. But it's likely that like you kind of have to net those against whatever happens here. In my view, like with these approvals. That said, I do think we're thinking the hundreds of millions in the first days and weeks for these products. But again, Bitto blew our doors off. We did not think that was going to happen. And then I didn't have high expectations. I know this is not the same thing, but I didn't have high expectations for the Ethereum futures ETFs. But those even underperformed my low expectations as far as flows go. Now, obviously, futures are not the same thing as we're talking about here. Yeah, I think we're looking at hundreds of millions initially. The over under we have roughly for a full year is right around 10 billion is what we're guessing we could see, based on looking at the Canadian market and the European market for size for crypto ETFs. But I mean, at the end of the day, everyone's just guessing here. I do think there is a little bit of a overhyping of the amount of assets that are going to come in, particularly over the shorter term time period. I think over the longer term, as these wirehouses and these platforms get more comfortable, do their due diligence, even just 100 different advisors putting a small allocation here, things can start to add up. But if you look at like the really high end here, you look at gold ETFs that have been around since I think 2003, 2004. I mean, they have 95 billion in assets, right? So it's not like, and that's a lot of assets. There's a lot of money in those products, but it's not the numbers that I've seen thrown around by people from the traditional crypto side of things.
The only analogy,
James, I had seen a report that the SEC was calling for a conference call with all the ETFs. Do we know any more information about that? If that was real, if it was not
Yeah,
real,
that
did it
was
happen?
yeah, that was not completely true. It was basically the SEC called. I think there was so technically the conversation the SEC needs to have is with the issuers and with the exchanges. So I think there might have been a bigger conference call for all these filers that are with CBOE, but for the most part, it was a string of calls from the SEC to these issuers, basically telling them they have to go cash and they want updates by basically tomorrow, as far as we're understanding. So I'm on the lookout for new filings, but essentially it's just going to be cash create only. There's no in-kind creation redemption. It was just the SEC, basically, as far as we understand it, getting all their ducks in a row, basically getting everyone on the same page saying, look, we're okay with this. We're not okay with that. This is the language we want. Like as Dave said in the beginning here, they're at like really nitty gritty levels of detail to figure out what we need to get done to get these things launched.
Yeah, wouldn't you read that as very positive for these ETFs being approved? I mean, we already think they are, but this just kind of shows me that, this is basically a done deal almost.
Yeah, it's pretty close. I mean, like I said, we've been at 90% for a while now because we viewed the SEC even going down this path that now we're like kind of at the end of the path we're at now with these conversations. So we viewed the fact that the SEC was willing even to start that conversation and go down that path as like a high indication that they were going to be approved. But yeah, basically this is just continued down that path of approval. We do, like I've said, for a long time, we think it's going to happen by Jan 10. I'm looking at Jan 8 to Jan 10 as the approval date, and we could see listings within a couple of days of that. It's not guaranteed that these things will be trading within a few days of approval, but it's certainly possible, particularly with how hard the SEC and these issuers are working. Like, you got to realize how much lawyer hours and man hours are going into getting all these documents filed and ready to go with the SEC. It's not a small task at all on either the issuers, the law firms, the exchanges, or the SEC's part. This is a huge undertaking to get done.
yeah, actually, I've been,
James.
it's all public, and you could just see the issuer after issuer submitting their updated filings where they're coming in and essentially, saying, okay, this will be cash creation. I'm not saying that's the final, endpoint, but I think that was the big requirement by the SEC to allow for institutions like banks to provide liquidity, so that it doesn't become so disruptive. Because at the end of the day, they care about retail, right? And you can track them. I've been tracking them. Every issuer is submitting their final filing. I think tomorrow is the deadline, and each one is going in cash, cash, cash.
James at Bloomberg, what's your base case about what is going to happen with Grayscale?
Yeah, my base case is I'm just assuming that they are going to be in this first wave. That's my base case. That said, if anyone is likely to have some other issues or some other snags or be slowed down in some way, it's likely to be them. Also, you can make the argument the SEC has talked a lot about fairness here in what they're trying to do and why they're trying to approve all of these at once. And you could argue that, all right, they don't want to be a kingmaker like they were with Bitto when they allowed them to launch alone and nobody else could go on that day. They could almost de facto be kind of being a kingmaker if they allowed GBTC go out on the first day. But then there's a lot of legal ramifications here. We don't know exactly what's going on that end. That said, like I said, base case, I think they are going to be in this first wave, maybe not the first day, but like very, very soon after. That's my expectation. I mean, if anyone, I would expect possibly Hashdex to be they could be the first ones to hold spot Bitcoin just because of the way their process works. In a similar way to Grayscale, Grayscale has an existing product. Hashdex has DeFi, and essentially they're just changing the strategy. So there could be a possibility where, like, okay, these approvals happen and it takes a day or two for these things to launch or for GBTC to uplist. But for DeFi, it's just an exchange. They exchange the futures for the underlying Bitcoin. So theoretically, they could have Bitcoin physically in an ETF wrapper before anyone else. So that's something I'll be watching. But for the most part, we're expecting them to be in the first wave. That said, if I have to put odds on anyone not being in that first wave that I do 100% expect to launch, it would be they might be behind. But we also, stuff we're hearing right now, it's going to be hard to just get to the starting gate of this race, right? Like, it's not guaranteed. There's a lot of things that are still being sorted out, specifically with the authorized participants, where some of these issuers who want to launch might just not be able to do it yet when these things are ready to go.
What has Grayscale given up on in kind?
Yes.
They have. Okay. So
Wow.
everybody is now cash.
Yeah, everyone's cash. Grayscale, ironically, so they gave up. They went to cash yesterday, or I think yesterday, maybe possibly the day before, and they actually added a risk disclosure, basically saying the SEC is forcing us to do in cash only, and that creates like these additional potential risks. Yada yada yada. So
And
there was
can you
kind of a little
talk? Can you
jab at the
talk
SEC.
more to that?
Yeah, I mean, to be honest, for the 90+% of people that are listening to this, or 90+% of people that would be buying these products, maybe even more, like, cash create or in-kind create really isn't going to make that much of a difference. Like, it's still going to functionally operate the same. There are hundreds and hundreds of cash create products in the US and around the world. What it does is it's the trading, the actual purchasing and selling of Bitcoin is going to have to happen in-house at the fund issuers. So theoretically, if somebody is is able to get better execution, it could end up showing up in slight differences in performances over given time periods. Like, if they're able to put the money to work faster or more at better prices, what have you, that you could end up having some ETFs that perform better than others. But for the most part, like, with spreads might blow out a tiny bit for cash. So we're talking like, okay, rather than like a 1 basis point spread, you might be dealing with a 2 basis point spread. There's no way to know for sure. What I can tell you is that there's plenty of cash create products on the market, and they trade extremely tightly. And for the vast majority of people, like, this will be a better solution than anything available in the market right now. You won't have to deal with the roll yield, the negative roll yield from Bido. You won't have to deal with the discount and premium issues that you currently see in these Grayscale Trust products. You're talking. We're at a point now where we're going over like really fine details of things that for the vast majority of people really does not matter.
What ETFs are outside of crypto? What ETFs have a comparable tracking error, like percentage? Like what would you say is a tracking error? I'll give you an example, because I think this is how some people are thinking about this, because 99% of us don't understand this at all, have like no firsthand experience with this. People said, oh, it's going to be a cash create instead of an in-kind, and that's going to make it a less attractive product to hold. And people were making the comparison to Bido because it holds futures, and there's a futures role associated with
It's
it,
interesting when you mentioned the
the
90
performance
billion
is.
in gold ETFs being kind of a small number compared to the 5 or 10 billion that we were talking about here. Daily trading on gold is 130 billion, and yet there's only 90 billion in ETFs. Daily trading on Bitcoin is around 25 billion. So if you had that ratio, you'd be more than double that 10 billion number in the first quarter.
Yeah, I think one major difference between gold, oil, and other ETFs is the supply, right? Relative to if you look at oil, right? What the open interest is and liquidity is relative to, let's say, daily production, right? 103 million, barrels a day, right? Relative to demand. I'm not saying there's infinite supply of oil or gold, but relative to Bitcoin, you have to factor in the finite supply. And that is the major difference that I see in terms of trading volume as a percent of global demand, supply, and overall world supply or potential supply. That this has never been, in my experience, both from an index, when I was at Barclays, and we were structuring ETNs, for example, that is the key difference. That is the key difference. Finite supply. And I don't say that because, obviously it's obvious, right? I don't say that as by way of, being too obvious, but that is the major difference between every other ETF out there. One other thing in terms of tracking error. Tracking error, for example, can, happen in ETFs that are less liquid, like, for example, the VIX or leveraged products where there could be temporary disconnection, right? And that's why cash creation is meant to avoid that error. There's no negative roll yield. There's no storage spreads. You don't have to play futures. And that, I think, from a SEC perspective, was really important because at the end of the day, they care about retail getting harmed. So I think that is one reason. The primary reason for cash creation is to improve the best execution in order to minimize the tracking error.
Igor, I would make a point that the tracking error to what? I mean, this is the biggest problem in Bitcoin. So you've got the Bloomberg Bitcoin Index. That is kind of uninvestable as an ETF. You can't create an ETF around that. It tracks too many exchanges. And so, for instance, at CoinShares, we have 15 different exchanges. We have the top 5, and we source from 3 of those exchanges to create the price index and track that. But people have different ETF issuers have slightly different approaches to that. And so it'll actually be quite difficult to know exactly what Bitcoin price you're tracking. You go to different exchanges, you see quite different prices at the moment. Perhaps as the market matures, that will improve. But products have a tracking error of around 3% at the moment for Bitcoin. That compares to something like a traditional commodity like coffee that has quite high tracking error, but obviously the larger, more liquid instruments in commodities like gold, for instance, have a very low tracking error. That's the only point I wanted to add.
Well, I think there are 2 points here that just have to be made. Speaking as someone who runs a company that processes 10 terabytes of market data a day for crypto, and I'm staring at a screen right now where Bitcoin is bid right now. The best bid is Kraken. The best offer is Coinbase from among U.S. exchanges, and Kraken's bid is $30 above Bitcoin, Coinbase's ask price. That's what we see right now. The fact is that the issuers will all have to be publishing in real time the amount of the price to create and the price to redeem a basket of ETFs. My guess is it'll be around 100 Bitcoin will be a typical creation unit, which would be about $4 million. But they're going to have to do that in real time. To give you some data, because I love data, right now I just ran, we have all this data in real time. Right now, I looked at just for 100 Bitcoin, I'm hitting the button as we speak. To buy 100 Bitcoin right now, you would have to traverse 165 price level combinations and exchange combinations just from among the 3 largest exchanges, Bitstamp, Coinbase, and Kraken. In order to do that, the price would move, more or less $50 from where the lowest bid is. That gives you a lot of wiggle room. Now, obviously, on the redemption side, they do the same thing. What gets fascinating is if you compare the execution price on any one of those exchanges, and the largest right now is Coinbase, trading across multiple exchanges, which is closer to where market makers would be, which is what most of these issuers are going to use, it's about 17 basis points more expensive to trade on one exchange. Where it gets fascinating is if someone comes to them with demand for 5 creation units. We're not talking about a gazillion here. We're talking about 5. So 500 Bitcoin. Right now, when I push the button, trading on a single exchange costs over 1%, almost 1.5% more expensive. And the gap to trade is about $150, $140. And so how you process this data, how you trade, how you get in the middle of that spread becomes very, very important. It's not trivial. And there will be differences. The people who have better technology will do better. The reason why is because when you're talking about every other ETF that has cash creates, you don't have a fully electronic liquid market where right now, in order to do 5 Bitcoin units, you have to traverse almost 600 price levels. Most systems are not built that way. And so, yeah, it is going to be different. Now, that said, what James said before is 100% true. Compared to BitO and what's going on with the futures roll and everything else, yeah, it's tracking to where the actual asset price of Bitcoin will be much, much higher.
Dave, if I can just add, like what you guys are talking about, I think a lot of the audience it won't follow. It's important to say if you've made life-changing money this year, because I do know some people who have, um, don't keep it at risk. The hardest thing to do with crypto is to keep your money unless you're just going to ride it out forever. That's unfortunately not what a lot of people do. If you made money that changed your life, use it. Manage your portfolio,
Yep.
because there's people with
Can
better
I say one other
technology.
thing, Joa? I
Yeah,
just want to
go
make
ahead.
one point. To echo that and amplify it, people watching, when you're trading in particularly an asset as volatile as Bitcoin, be exceedingly careful for leverage. What always happens, and the reason that the cycles are so pronounced in Bitcoin and in crypto in general, is people use a lot of leverage, and worse, they lever up more as they're making more money, putting more risk as opposed to taking some risk off the table. So I violently agree with you.
Yeah, I wanted to get Matt's opinion here. Matt, nice to see you again. Not sure you remember, when Ben was at Zilliqua, he had interviewed me for CMO. Didn't really match up on strategy,
That's
but
right. Yeah.
uh, congratulations on the promotion. Nice
Thank
to
you,
see you
sir.
at the head of the wheel. What do you see as someone? Matt is the CEO of Zilliqua. Very curious as to how someone who is running a chain, one of the bigger chains, kind of sees this market.
Yeah, it was interesting to hear everyone position what's going to be happening with Bitcoin, and clearly everyone at Zilliqa is eagerly anticipating that as well. I think from our perspective, and it's interesting hearing a lot of these conversations, it's never really about the applications that are going to get people to actually use the technology that underpins these layer ones or layer twos. And we're very much heads down trying to build applications that, again, they might be a hybrid of centralized and decentralized, but around kind of trying to drive that value transfer, which I think everyone appreciates as a big component around what the blockchain space can offer. And I think from our perspective, looking at where the market was probably 2 years ago, and we're starting to see it in a lot of the conversations around what is maybe the next or one of the big trends to kind of come this year or next year, is really gaming. And that was an area that kind of we leaned into quite heavily around the GameFi asset class, and kind of how that will look. So from my perspective, it's quite interesting to see or hear the institutional investors are going to start to get involved in ETFs around Bitcoin and potentially Ethereum. I guess further down the line, I'm presuming ETFs around GameFi and those sorts of asset class start to become quite interesting, particularly as it's probably an easier domain to get your head around in terms of allocating capital, because it's a genre that most people understand. So yeah, it'd be good to get some of the people on the panel to kind of talk about what their thoughts around the GameFi asset class, and do they think it has legs?
Yeah, it's funny you mentioned that because today I had no idea there was a cannabis ETF, and apparently there's some approval up for declassifying or changing the classification of cannabis, and people were talking about the cannabis ETF. I didn't think it went that far, but yeah, I could see a GameFi ETF in the future. I wanted to go to like Travis and Dave, maybe Joe. Eh, do you guys look at other things besides Bitcoin? I mean, I know you guys probably invest, but are you looking at the tech also, or just the speculation? Go ahead, Dave.
We've done a good amount of that in the past. Have not been as focused on that over the last year. Um, there's definitely a bunch of guys that just spend a lot more time like on the fringe stuff than me. I will say one thing that seems kind of interesting and different about this cycle, and I'm not like highly convicted on this. This is more of a like, it seems to me that the willingness to step further out into like vaporware or meme coins, that actually seems stronger to me at this point in the cycle than it was in the prior cycle, which is not what I would have guessed. And it's like, and I would love to hear if other people feel differently. From my perspective, it seems like maybe the market has lost some of its pretense that any of this shit does anything or will ever do anything, and is just okay with that. And that and it may have something to do with Bitcoin's price, and people just feel like, oh, I cannot get rich off of Bitcoin, because it's just not going to, a double's not going to get it there for me. A 3x even isn't going to get it there for me. And I think Ethereum and Solana were that last cycle, and people saw, and a handful of other names that had, tremendous runs. I think Solana was certainly the kind of poster child of it, and competed as an alt L1 against Ethereum in a degree and to a size that no other L1 had ever done before in any cycle.
Travis,
And there just seems to be an
Solana,
appetite for it.
Yeah, the Solana one, like I agree with you, but I think it's also because the ETFs are coming around, so the focus is on speculation because of that. But if you really look at what happened to Solana, Solana started to take off because Helium, which is one of their applications, launched their cellular program. And after they launched their cellular program, Solana skyrocketed. So to a degree, it wasn't just, yeah, their meme coins also took off, but that's, I think, because people take profit out. But the whole 5G helium thing really like set Solana on fire.
Yeah.
Go ahead,
Yeah,
Matt.
yeah. I mean, it had a big move before that.
I just think the meme coin is definitely a zeitgeist play, and even on Zilliqa, I think we've got a couple of meme coins like what we're seeing at the moment on other chains like Zilpepe or Dogecoin, which are really about trying to unify the community around project building on it. And I think you're right, Travis. A lot of people are kind of maybe over the embarrassment of it, and they kind of get it. And we talk to a lot of brands, which is the interesting piece around all of this, where they're still trying to get into the space and work out from their perspective how can they leverage the digital asset sides to drive their communities, engage their communities, and drive that value transfer, because it's very much the Gen Zers and that have no loyalty to brands anymore, and they feel that the kind of a Web3 approach to it gives them a slight differentiator to try and tap in that new route to market, which I do find quite interesting.
I would like to also add one thing. I'm really studying this space, and this is where I invest. Having lived, and many of us have lived through Web 1 and Web 2 and Web 3, I invest in core infrastructure. And what I mean by that, and I'm heavily focused on layer ones, the big thing, just looking through the Bitcoin ETF looking glass, right? In terms of what's really happening with core infrastructure. I'm very focused on, for example, real world asset tokenization. That is a $475 trillion opportunity. I think 270 of that is just real estate. And we've already started to see green shoots of what's happening in, real world asset tokenization. About 2.5 billion is tokenized right now and fractionalized. That is so early. So I'm focused on the layer ones that are going to be playing in that space. For example, Avalanche is starting to build a moat, right? They just did a proof of concept with JP Morgan, Apollo, and Wisdom Tree. Citi is doing foreign exchange. I believe they also used Avalanche. There are other protocols, of course, that I'm watching. Injective, and really others that participate with layer twos because they have to, including Ethereum itself, that's trying and is on its way to full sharding, although it's far away in my opinion. So when people, just echoing what people are looking at in terms of, where's the next, massive opportunity, I think we have to look at, I'm looking at it and I'm investing in it, is an RWA. And it's so early. It is so early in that market. And it's everything I believe will be tokenized, fractionalized, digitized, including obviously money itself. So that's where I'm placing my bets. And just one last thing, my biggest position is Chainlink, because in my opinion, nothing works without it, right? So it's sort of the everything. It's the Amazon, right? Most .coms went to zero, but we did get an Amazon, and I believe there will be a few, and it'll happen faster to get to $1 trillion market caps.
Yeah, you mentioned my favorite chain, Igor, which is AVEX. So I appreciate that. Go ahead, AJ. Sorry, I interrupted you.
Oh, you're good. You're good. Igor, I completely agree with you. I mean, Chainlink powers everything. I mean, definitely has a monopoly grab hold on the Oracle space without a doubt. And, RWAs are certainly the future, especially, you mentioned Avalanche or even if you look at Algorand, HBAR, I think RWAs, that narrative is certainly going to be a big driver in 2024. But Matt, I do kind of want to put it back to you, Matt. I wanted to ask you about, the game Web3 war. On my computer here in front of me, I'm watching, this edit, and the gameplay looks amazing. I mean, I'm all for a first person shooter, and I just wanted to ask you, about the game and the value prop, with it being Web3 war, and just kind of give you the floor and let you talk about it for a minute, and then we'll ask you some questions about it.
All right, thank you, sir. So yeah, I think I just alluded to it a bit earlier on. Actually, the gaming industry is massive. I think there's 3.2 billion gamers worldwide. I think crypto has tried, hasn't it, before to kind of get people to play games in crypto. Actually did a great job back in the last bull run, but at the end of the day, it was just yield farming. And with all due respect, getting gamers to want to come in and yield farm is probably not going to have a longevity that everyone would expect. So from our perspective, and I think where the market's heading, it's clear that people needed to build games that were fun and engaging and complemented with a small subset of, I think Igor talked about the tokenization aspect, but tokenizing a specific component that made sense, that would add value to the experience for the game. I know there's a lot of pushback from gamers around gaming and crypto, but we feel that if we could create games and underpin our philosophy around that, we felt that we could start to get some traction. So yeah, so from our perspective, clearly you've looked at the gameplay. We worked with Unity, who everyone knows is a market-leading engine, and we created a game that's fun. We enabled a crypto aspect, obviously based on the Zilliqa blockchain, and I think somebody mentioned Avax are doing some good job in that space. We're changing our consensus to a similar sort of model to that. I think that should give us parity down the line, but ultimately it enabled us to have a kind of a Web3 platform that was more around delivering a good experience rather than focusing in on the crypto component, which gamers inherently are not educated and not interested in. So from our perspective, rather than time in game, we came up with this mechanism more around a skill to earn mechanic, so that in life, obviously, man has got this spaces, and obviously he's done well with it. If you're good at something, why would you not be rewarded for playing that game? So it's very much around building the mechanic to support that component. So if you think about it, you're sitting there, you are playing a game, you can earn some reward from it. It starts to become really compelling. And then another area that we kind of focused on and built out is what we've seen with Illuvium talked about in terms of this cross digital assets or skin NFT across games. So when we think about value transfer and taking digital assets from one game to another game, maybe in a specific genre the same, we start to feel that becomes quite compelling in terms of where the differentiator is in terms of your classic games. And when you think about longevity, having those NFTs or skins being able to be moved across different games is really exciting. So when you look at the kind of the stats and the numbers, I think we've got over 63,000 players already playing the game, which is quite exciting. Google kind of did a showcase with us. We managed to get on the Microsoft Store. We've done a lot of things that don't really endear ourselves to the crypto massive. We kind of make sure KYC is a function of what we do to access tokens. We've got copyright and all those good things in place to make sure that longer term we're doing all the right things from a legislation perspective, which obviously is catching up with the whole industry at the moment. And then from our perspective, we work with the likes of all the some of the big esports teams like Ninjas in Pajamas, RRQ, and their kind of players are starting to showcase the game globally. So from our perspective, we start to pick up a lot of traction from the likes of Yahoo Finance, Decrypt, Edge of NFT, and obviously getting a format today to be able to talk about the game is really exciting. And from our perspective, we're going to start enabling the mechanic early February, and we're kind of running an IDO at the moment on some of the tier one launch pads in the middle of January, which is really exciting, which is going to kind of bootstrap the game that we've built out. So yeah, so I think from our perspective, all the stuff that you see in terms of care packages, being able to kind of buy merchandise, to buy NFTs, to buy skins, all the classic stuff that these institutional investors who understand their kids coming to them and say, Dad, Mom, can I buy this? We've got all that capability embedded within the hub. So the onboarding and education component should make things a lot easier.
Matt, it is the best looking first person shooter I've seen in Web3, but can you talk to me a little bit about the tokenomics of it? Is there a token? Is there not?
So I think
how are you going to manage?
Yeah, so from our perspective, clearly utility, I don't know the definition specifically, is around satisfaction and pleasure someone gets from consuming a product or service. And I think gamers, they can't dispute the fact they love competition and people love to be at the top of any leaderboard. So at the heart of Web3 World is this skill to earn mechanic, which is really about players being rewarded for honing their skills. So from a rank match perspective, being able to play against each other, proving your skill, and being rewarded with this FPS token, and proving out that you're GOAT is going to be quite a nice utility that we're kind of bringing into the utility. You're going to be able to use your FPS tokens to stake to get into rank matches again as a mechanism to kind of earn rewards for playing. And then with that, you're going to be able to start to unlock access to a significant range of rewards and in-game content. Again, if you think about how do you onboard users into an industry like blockchain where people don't really understand it, if you can create a format that people understand to interact with, that's very much what we've done. Again, within the hub, there's the ability to buy merchandise. We've got gamers and streamers love music overlaying what they're doing. So again, the token can be used to buy a streaming service from the likes of Stinger, which is a pretty cool kind of add-on. So it's really about driving new revenue streams into an economy rather than just seeing as a kind of a circular economy, which obviously has been a big challenge with a lot of projects over the years. So time will tell how successful it is, but we're quite exciting and kind of where we've got to. And then if you think about community and what Web3 is based around, obviously we'll be listening to community around where they think there's potentially more opportunities to kind of drive value. And fundamentally, being an open source token, you think about the Zilliqa ecosystem. Somebody's mentioned Chainlink as one of their kind of safe bets, but could you not start to create a prediction market about what's happening with the game, with the FPS token, based on kind of the opportunity? And that really is the beauty within the space. You can start to build ecosystems and economies quite quickly that nobody would expect.
Is this going to be, so I remember when I had an interview with Ben, his big thing was metaverse, and I was kind of against the whole metaverse narrative. Is this going to be the big bet of Zilliqa? Because
No,
I've been working with AVAX. We've been betting on NFTs, and it's kind of helped the market. And chain support is very important. So is the GameFi going to be the big narrative for Zilliqa,
it's
or
an
not?
interesting question. I think Zilliqa is more focused on domain-specific approaches. So specifically in gaming, we hired somebody, Valentine Cabello, who had 2 exits in gaming. So very much, right, we understand gaming, you go and execute and deliver against that. So that's what he's kind of got us to a position where we've got something we can leverage. Within Zilliqa as well, we've got a loyalty kind of framework that we're kind of rolling out to the esports teams. Again, that's the entry point that they want to target Web3. And clearly, there's the opportunity for them to move into gaming, to move into potentially metaverse activations, depending what they do. Specifically, coming back to metaverse, we've got a metaverse entity that's now operating out of the Middle East, being headed up by Sandra Halou, and that's very much about how do we activate brands, loyalty brands in the space to come into Web3. And very much, if you think, if you look at what Zilliqa kind of group has got within its arsenal, you can come to us from a white label perspective and say, right, maybe we want to do loyalty, maybe we want to activate in metaverse, or maybe we want to activate in gaming, and we can kind of do the cradle to grave capability with that, supplemented obviously by a public blockchain where we've got projects like liquid staking with Avily Finance, and you've got PlunderSwap doing a kind of EVM DEX, and we've got a lending and borrowing application, Ionize, that's been built out. And clearly you need a financial infrastructure to kind of support the token economies that are being built. So I think Zilliqa has very much set itself up for this next bull run that's coming, with a lot of the capabilities that we have at our disposal. And it's more a question of who are we talking to in terms of the opportunity that's going to drive users and people into our ecosystem. And hopefully a converse of that is if you're a developer or a builder looking to build on Zilliqa, by virtue of a lot of the projects and that we're kind of working on, you're going to start to see a lot more users within our ecosystem that people maybe don't about. There's a good example actually just before another question comes in on Solana. I think Photo Finish Live, they've done a great job from a racing perspective in terms of a game that they brought to market. We've recently done a partnership with a group in the UK, and that's very much going to be a physical. So we talked about physical opportunity where you get discount on real world horses, you get NFT access to the likes of Frankie Dettori, and then the next phase of that will be taking that IP into the metaverse or into the gaming arena to kind of have a similar sort of play. So we can start to kind of transition a token from the real world into the digital world and vice versa, which we think is quite a cool concept. And that, I guess, underpins our go-to-market, where we can range from a loyalty program into a metaverse program into a gaming program. And then being the layer one, you've clearly got access to all the kind of capability that you need to support an ecosystem.
Before you open it up to questions from the rest of the panel, is the token live already? Can people buy it?
The token's going to be live in the middle of January. So there's an IDO event happening in the middle of January. Names of those launch pads to be announced. And then
you'll be publishing that in on your Twitter.
Correct. Web3
right?
War, yeah, at Web3 War.
I have a question. Like, where do you play it? On an Xbox, PlayStation, on a computer? Can you switch? Like where's
Yeah,
what's
moment
the common denominator?
it's a Windows PC that you need to use. So you kind of download a hub like Steam, essentially. It's kind of a Web3 version of that. So we've got the distribution component. And then clearly, first title will be Web3 War, which is a first-person shooter. I think the second game we're bringing out is a looter shooter extract game, like Tarkov, which is going to be pretty cool. And then yes, we're starting to do probably the more mobile games to target a wider audience. But we wanted a case study that was successful, looked good, easy to kind of onboard. So yeah, I can send you the details.
Yeah, for sure. We are going to wrap up here soon, but I do want to ask you, like, I'm a big gamer. I love playing video games. I mean, if I could just stay home and play video games every day, I probably would. I probably would. But besides the point, like, I'm always into like the story of the video game, right? Like what is like is there like a lore, like just a quick 30-second to 1 minute overview of like the story of the game? Is it like a mission? Did the team get abandoned in a forest somewhere? Like what's the story there?
I think it's more around, and Valentine's probably is listening. Actually, is going to shout at me as a CTO. He's the one that kind of came up with the game and everything else. It's really about a hyper casual game that's fun to play. You can quickly drop in. You can be good at your craft. You can earn the rewards, and you can move on. I think when you start to look at the second game that we're bringing out, that's going to bring out a larger story. But we really wanted to focus on something that people understand, get the game out, get them playing out, prove out the tokenomics, and then move on to maybe a more expansive game. I think you look at like what Shrapnel have done, who've raised, I don't know, circa 40, $50 million to build out a game. Clearly, they're probably in a stronger place to have a massive story that they built out. I think what we've done on the budget that we've had, and Joe mentioned it, it's a kind of really nice looking game. I think we're actually in a really good spot for the kind of the capital we had to kind of deliver.
Yeah, I mean, for sure. I mean, I'm always about like, getting engulfed by a game, and normally that comes with the story. So I'm definitely looking forward to what you guys come up to with the future on that. So we are going to wrap here relatively soon, but is there anything about the game that you didn't get to say, or like what are you looking at like for 2024, like roadmap wise, like what are you looking forward to this year with your game?
I think from a game perspective, I think it's just how do we leverage the ecosystem potentially as a function of what we do. We've obviously got a DeFi neobank where you can off-ramp your FPS tokens onto that, which I think is pretty cool for people looking to build games in crypto, and how do they kind of off-ramp. I think strategically, if you look at Rolling Thunders, people know Gala Games around what they've done from a distribution perspective. Rolling Thunders is really about a gaming business that's building out a distribution platform. So a lot more games from independent game publishers will be able to kind of get their games launched in our ecosystem, which I think is going to be massive for the wider ecosystem within Zilliqa, which is exciting. And yeah, I think from our perspective, getting the game live, which is no mean feat in the crypto space, when a lot of people talk about launching stuff which doesn't actually come to fruition. I think I'm really proud about the resilience that's been showed by not just the gaming business, but obviously the infrastructure team as well, which I think is a testament to the work that the guys have done.
Yeah, thanks, Matt. We're going to wrap up. I'm going to definitely be keeping an eye out on Zilliqa and on Web3 War and checking it out. Zilliqa is like an old school chain. It's been a darling for me from the past, someone who's been in since 2012. So I'll keep an eye out. I'm waiting to see if Igor's right and there's a million Michael Saylors that come into the market, and hopefully 2024 is the mega bull run we've been waiting for, and I'll see everyone next year. Enjoy your New Year's, guys.
Thank you.